So what qualities are you looking for in companies that you want to invest in?
Okay, the big one really is around, as I say, valuation is really important for me. But the one I really like is growth. I want something that is showing a great history of growth. And one stock, it's a good example. One stock I did really well on recently was 32 Red, TTR, which got taken over. And that was fantastic. And what happened with that one was, what I loved about it was, even with all the problems with the POC tax, point of consumption tax, which was a new tax thing that was brought in for online gamblers, even with that, when you actually looked at their history, you looked at the revenue line, every year the revenue grew for like 6 years or something. It just grew. The profit grew. The dividend grew. And you just got this steady growth. And I love to see that. When I find companies that got that steady progression, I just love that. That is like the holy grail for me. Especially seeing dividends rising. I love that.
So what would make a particular stock or company appealing for you to invest in? That growth,
that growth's a big one. Often the valuation, if something just looks stupidly undervalued. Like Molin's is a good example. I think Molin's at the moment, they've got a bit of cash, if you strip the cash out, it's on a PE of about 8. And that's just so low. Anything on a PE below 10, a forward PE below 10 is cheap. Unless it's something really weird like a house builder, in which case you've got to be a little bit more careful. But most things are on a PE below 10. If you're on a PE of 8 or 6 or something, that is just so cheap. You've almost got to buy it because it's rude not to. But obviously you need to realise that these things can be value traps. It's no good. The ideal situation is to buy something that's on a really low PE, but it's in a turnaround situation where they've had problems, but you can see they're now coming out of the problems. And it's not just in terms of the company clearly heading the right way, so they've been doing cost cutting and whatever. It's also looking at the chart. Look at what the chart is telling you. If the chart has been in a downtrend and then it's broken out and it's moving into an uptrend, that is telling you that other market participants think the share is improving. So if you can buy it while it's starting its uptrend and it's on a good valuation, great time to be buying.
Do you also look at whether or not the company's paying dividends?
Yeah, dividend. A dividend. A dividend is great in two ways. A dividend is great because if you're trying to achieve 10% a year and you're getting 3% in dividends, you're a long way towards your target before you've done anything. But the other thing that's great is it instills a discipline on the company. It's a good discipline on them. If they have to, most companies try to do a progressive dividend policy, which means the dividend increases every year, and that is such a good discipline. It also shows that if they're managing to pay that dividend, they're probably not manipulating their accounting profits all that much. No, they're probably not manipulating their profits because they actually are producing cash that they can pay out to shareholders. Yeah. Obviously, if the dividend's rising but the debt's increasing, what's really happening is they're using debt to pay you. So you've got to watch for things like that.
So I was going to ask you next, actually, do you look for companies that are cash rich and do you avoid companies with debt?
Yeah, as a general rule, debt tends to be hard work. I've got a problem with a company at the moment, the AA. Great company, one of the strongest brands in the UK. Loads of service. They're like the number one most trusted brand, and they're massively cash generative. It's something like their profits. Of their profits, they sort of, something like 95% of it is cash. But the problem you've got is they've got this massive debt pile, and as a result, the shares are really struggling because people just don't want to buy them because of the massive debt. But, they're on a really low PE. I think it's on a PE of about 8 or something. It pays 4% dividend yield. And that dividend looks very sustainable. And they're going into a transition because what happened is they were owned by private equity. I think it was Sinvan or something, owned them for years, them and Saga. And what happened was they've moved from private equity, they IPO, floated. And what's happening is they're trying to do other things like more financial services, credit cards and banking and trying to branch out into other things. and that's where the company's going to go. But because of the debt, the market just doesn't really appreciate the story. I mean, I'm happy to sit with it. I was getting 4% dividend, so I'm quite happy to sit there and let it run. But if they don't start doing something at some point, even I will get fed up with it and end up selling it.
So you love to invest in cash-rich companies and avoid debt. Is that something that you actively look for?
Definitely. I mean, one of the things I really like is if you've got small companies, so these are companies that are on AIM or in the FTSE small cap, really those kind of things, or FTSE fledgling. What I like is when they've got a nice cash pile. And if there's two things, you want to be you want that cash pile to be growing. I mean, one of my favourites at the moment is Moss Brothers, MOSB. The people who do the suit hire and stuff. You'd think, oh God, that'd be a load of rubbish. But actually, it's a great little stock. And the reason it's so good is because it's got something like 22 million of cash in a market cap of, I can't remember the numbers, but it's probably like 100 million. So a massive chunk of the company is actually in cash. And the beauty is, if you look at it, the cash increases every year. So they're trading so well, they keep adding to this cash pile. And it means you've got a massive margin for safety. It'd be very hard for Moss Brothers to go bust when it's got so much cash. And the other good thing is that they pay a really big dividend. It's over 6% dividend, I think. Or it might have dropped a little bit now as the share's gone up. But that dividend is very sustainable because they got the cash to back it up.
So we've talked about having a low PE, being cash rich, a growth pattern you like to see. Are there any other fundamental factors that you like to see?
Yeah, I mean, again, it's a big thing I think with investing is avoiding the problems. Steer clear of trouble. Don't buy trouble. And one of the biggest mistakes people make is buying all these blue sky dreamland stories that very rarely work out. But not only that, you've got to avoid the dodgy management. They are out there. There are certain people who run companies who are as dodgy as anything. And with experience, over time, you get to learn who they are. You get to learn the ones to avoid. If you get a group of people like we've got on Twitter, and I've got a lot of investing friends in that, and we all know which ones to look out for. So you'll be looking at a company and one of your mates will say, no, you want to be careful because that guy was at such and such a company and look what happened there, all the dodgy stuff that was going on there. So, it's those kind of things you've got to look out for.
So those are your decisions that drive you in a purchase.
Yeah.
But what's your process for building on a position?
Right. So it's around that technical thing. I want, I might have bought into the best company in the world, right? I think this is fantastic. This stock is going to be brilliant. But at the end of the day, if the market doesn't agree with me and if the market doesn't move the share up, then in a way I'm wrong. I'm not wrong, but I'm sort of wrong. So what that means is I want to buy a great company. I want it to then, the share price to start moving up or to do, to break through certain key levels. Because that is then confirming to me that I'm right. It's like the market is telling me, yes, Pete, you got that right. Then I'm happy to put more money into it. So it's like a confirmation.